Hello and welcome back to Business Matters at the Hindu with me, Bharat Kumar. Russia's unfortunate invasion of Ukraine has triggered a host of sanctions by the West on the invading country. A lot of claims and numbers are being bandied about. That the war, coming immediately on the back of the pandemic, will impact global economic growth is a given. The other important question is, what impact will the war have on India's fortunes? Let's look at fossil fuel trade, specifically oil trade, because any change in global oil trends not only impacts India's economy, but also our inflation rates directly and almost immediately. Let's dive into the details. So sure enough, sanctions have meant that Russia's exports have declined since March. But any disruption in the supply of a commodity or even anticipation of such disruption sends prices spurring up. How does it work? Assuming that you want to attend the next IPL match with your cousin and you want to buy a couple of t-shirts that show your support for your team, sporting the same colors, you go to the nearby sports goods shop and they say there's only 2 left and supplies are halted, so you won't get any more before your favorite match will be on. So what's your reaction? You're probably willing to pay slightly more than your usual price because there's supply that has been cut and you're willing to pay more than what is normal, saying no, I don't want anybody else to get it, but let me have it. So the sentiment is similar in global commodity markets. So even though Russia is selling oil at a discount, and some estimates have it that the discount could have been up to $30 per barrel, when global oil prices were hovering in the $150 to $120 per barrel range. So even though Russia is selling at a discount, it has raked in far more dollars per barrel since the war began. The Finland-based Center for Research on Energy and Clean Air has sliced and diced the numbers a bit. In a report, it says that in the first 100 days of the war, Russia exported $98 billion or 93 billion euros worth of fossil fuels. This includes not just oil but also coal and natural gas. Why is this a concern? Because it costs Russia about 840 million euros per day. If you look at the first 100 days, about 84 billion euros. And the revenue from fossil fuel exports by Russia has exceeded that sum. Ironically, much of this was from the European Union, which has condemned the invasion. So which countries imported from Russia in the period? The agency says India, France, China, the United Arab Emirates and Saudi Arabia had increased imports. You can see from the table that the largest importer of Russian fossil fuels was China, but it was soon followed by Germany, Italy and the Netherlands. Significantly, the agency says France, Belgium and the Netherlands bought most of their short-term cargoes at a discount on the spot market. Spot market purchases are typically active purchase decisions, not part of some long-term contract that is signed before the war. So if a buyer spots something that's good for him at a certain economic price, he or she goes in and buys it. So much for the oil itself. How about the ships that carry these cargoes? Where do they come from? In April and May, 68% of the deliveries of Russian crude oil were made by ships that belong to the EU, UK or Norwegian companies. For deliveries to India and West Asia, that share was even higher at 80%. And almost all tankers, that is about 97%, were insured by companies that were based in the UK, Norway or Sweden. So why should the economics of oil matter to you? India is the third largest consumer of crude oil after the US and China. With our refineries importing far more crude oil from Russia in the recent past, our country's share of Russia's total crude exports went up from 1% before the war to about 18% in May. The Finnish agency, whose data we discussed earlier in this conversation, says that official data from India showed that some of the refined oil deliveries going outside of India were leaving for the Suez Canal, which means they were likely headed to nations in Europe or the US. Why is this a concern for those nations? Because some of those countries may have said, let's not buy any more crude oil from Russia, but if they instead end up buying refined products from India, then that defeats the spirit of the ban somewhat. In the time since the war began in February of this year, Russia has overtaken Saudi Arabia as the second largest supplier of oil to India behind Iraq. Data from commodity analytics firm Kipler shows that overall India imported about 840,000 barrels per day or BPD of Russian crude in May this year. This compares with about 388,000 in April and significantly higher than 136,000 that we saw in May last year. June estimates are that we would import more than 1 million barrels per day. Why is all that data important to us? Because if you look at information for the most recently concluded month, which is May 2022, India's total imports averaged about 5 million barrels per day. Russian Urals crude used to account for 2% of all of India's total oil imports before the war. If the above average is sustained, then it could well be on its way to accounting for 20% of total oil purchases by India. There may be a lull coming up though for India because of the long shipping routes, right? After all, oil has to go from Russia to nations like India and China, refining has to happen there, and then that product has to be shipped back to the Western Hemisphere. So Western countries are hoping that strong sanctions against tanker companies would limit the scope for this kind of rerouting of Russian crude oil. As the West mulls further sanctions, it has to weigh its dependence on fossil fuels from Russia. Further sanctions raise uncertainty, they spur global prices upwards, which means this also feeds into inflation. Inflation levels in the West have touched rates that have not been seen in the last 40 odd years. So obviously the story has not played itself out fully yet. As the situation evolves, we will have updates for you. Stay with us. Till the next episode, goodbye.